Morning, everyone. Thank you for coming to listen to our presentation. I'm going to be focusing mostly on just the update that we provided earlier this year. Our company provides very good exposure to the gold price, and as you can see, the share price has responded very nicely to the gold price in the last few months, and hopefully recently also been responding to the company's performance. And I'll spend a bit of time on the company performance. You're all familiar with the gold price, and I think most companies, gold mining companies that offer this almost kind of proxy exposure to gold price have benefited, and we're really hoping to see the performance of the company also starting to resonate in share price performance. The company is one of the largest in terms of tailings recycling. So we listened to a presentation on discovery of assets and the building of mines and so forth. We come in at the tail end. We mine that resource that gets left behind, we mine that again. And of course that slots in beautifully with the contemporary story of ENS that the market seemed to have discovered only recently, and which is really only just an adaptation of the sustainable development theme. But this is what we look like. We have Sibanye-Stillwater that exercised its option. It invested just over R1 billion into the capital of our company. So we have a rather large net cash position at the moment, which we want to apply responsibly. And then the rest of our shareholders who really determine the value of the share, because Sibanye doesn't trade, it's the rest of the shareholders who decide what they believe the share is worth. They hold the other 49.9%. The company has two operating footprints, Ergo on the East Rand, and then we've got the Far West Rand, which is the asset that was acquired from Sibanye recently. So moving on, our approach really is to not go underground. We're a South African-based miner, and we believe that we don't really want to take the sort of exposure in terms of risk and otherwise operating complexity associated with underground mining. We've been there. We were amongst the first. DRDGOLD is older than 130 odd years. It was one of the first deep-level mines in the Johannesburg area in Roodepoort. And we've now come full cycle. We're now at the back end of mining. We're in the cleanup phase of mining, and we figured out how to do that profitably and sustainably. So our resources on surface, 9.8 million ounces, reserves of 5.8 million ounces, and this is all accessible through existing infrastructure and pipeline infrastructure. And this is basically what it looks like. So the model is a simple one. They're the tailings that gets mixed with water and then pumped to two bespoke plants. Then it gets subjected to a normal CIL process, and that tail then goes to a very well modern tailings deposition facility. We've got two of those, the Brakpan facility and also the Driefontein facility on both sides of the operations. And we produce doré bars. The land that gets cleared, remember this is now a footprint that had been impacted by mining for more than a century. That land goes back into development. And we're now coming at a stage where most of the land that we clear, in fact, belongs to DRDGOLD. In the past, it was land that belonged to the old Rand Mines Properties, or IPROP as it's now called. We've now migrated further towards the east, where most of the land, in fact, belongs to DRDGOLD. And DRDGOLD is one of the largest landowners in Johannesburg, with roughly 6,000 hectares of land in and around the Johannesburg area, of which probably about half is capable of being developed over the next, let's call it 20, 30 odd years, depending on appetite, capital, and demand. It's a mechanized process. We've moved away from labor-intensive mining, focusing on mechanized, and it's not a coincidental that the picture that you see there is of a lady. We have more than 20% female employment. We're the largest employer of women in mining in terms of the operating aspect. This is not people working in offices. This is actually in the operations itself. And I think if we knew then back then what we know now, we probably would have made this change a lot sooner. Equipment just seems to last a little bit longer when you have women managing it. The whole story is one of rehabilitation, or mining through rehabilitation through mining. We are literally cleaning up the environmental legacy of mining in and around the Johannesburg area. And those facilities that are permanent, like the large tailings deposition facilities, they are being closed off in such a way that they do not impact the surrounding community. So the motto of improving the quality of life in and around Johannesburg that is real. It's something that we can actually do, because those communities that have been impacted and that are still being impacted by the remnants of mining in and around Johannesburg, we're progressively seeing how quality of life is just getting that little bit better year after year after year. There's still a lot of work to do, and we are reminded consistently that there are still gaps in this whole setup. There are still areas that require our attention, but we're getting there, and the situation now compared to where it was 10 years ago is chalk and cheese. So the two operating footprints, the Far West, that's the Carltonville area, some of the richest veins there. The tailings emanating from those, Driefontein and Kloof, is what we're accessing now. It's a spectacular resource from a surface cleanup perspective. And then Ergo, which is the established one, very high volumes, lower grade, and far more complex setup, but certainly still very much the mothership and the center of gravity of our operations, providing the infrastructure and the skill set required to take this model further than the existing footprint. And that's basically what this slide is saying. Ergo is the stable mothership where we hone our skills, where we teach people how to do this. And the first Far West operation is the first of the new operations and projects that we've ventured into. And hopefully we can now accelerate that process with the momentum and the weight provided by Sibanye-Stillwater. So the strategy is to generate a profit, to continue to pay dividends. We're the longest dividend-paying entity in terms of gold production on the Johannesburg Stock Exchange. We've been paying uninterrupted dividends now for the last 12 years. Sometimes it's a small dividend, sometimes it's a big dividend. But then if you just move a little bit on into the rest of that slide, then you'll see that we're essentially describing ESG in those slides. So sustainable development was adapted as core strategy, informing our thinking, the deployment of resources and capital for many, many years. And that's now resonating into what has now become ESG. And we think that we have a lot of information that we can share with the market that can deliver into that requirement, into that demand. So I'm not going to go in too much depth on the 2019 performance. You've seen those numbers, but what I do want to just share with you briefly is the update. So we published this about a week ago, and it has been a very, very good 6 months for us. Production is up significantly, revenue is up significantly, earnings per share, I think, is up 8-fold. So the gold price, coupled with very good performance, both from both Ergo and from the Far West operation, have really found its way into our operating and financial results for the year. We have just over R1 billion in net cash. This is from operations. This is not including the 1.1 billion that found its way into our capital by way of the exercise of the option from Sibanye. By the way, that's the single biggest investment that any single shareholder has ever made in the capital of our company. And this is at a time when a lot of companies are leaving South Africa. Some prominent names have decided that they've had enough. We've just had a capital injection of 1.1 billion to supplement the 500-odd million that we already have in cash. We don't believe in debt. We try to avoid debt as far as we can. We had a bit of debt, 192 million, following the construction of the Far West operation, but we paid that down in a very short period of time. And we will want to remain cautious of debt. We don't have to venture. If the choice, though, is debt and the issuance of shares, then obviously we'll take on a bit of debt, short-term debt. I've spoken about the dividends, and we're in a position to continue along that track record. And this is our guidance for the year. We're bumping sort of against the top half of that guidance, closer to the 190,000 ounces than the lower part of the range. Following the first 6 months, both Ergo and Far West doing really well. And then, of course, we're now in a position to start accelerating the work that we want to do in terms of the Far West operations. We want to optimally exploit that ore body. And yes, that's our disclaimer. So thank you very much for listening to our presentation. It's been a very good period for us, and we hope to build on that. Thank you.